Don't pay off your car loan early. I repeat, don't pay off your car loan early until you have watched this. I have paid off my car loan early for 2 of my cars, and I have made a mistake. I made a mistake, and I don't want you to be repeating the same mistakes that I have made. And I've made a promise to myself that the next car that I'm going to get, I won't fall for the same mistake in the name of paying my car off early. So hi guys, I am XIREN. I am a chartered accountant by profession. So welcome to the channel, and if you find the content interesting for you and you want to learn more, don't forget to like, to subscribe, and to hit that notification bell, and also to leave your comments and your views as well. I will get back to them. So today on this video, we are going to be covering, should you pay off your car loan early? Should you settle your car loan early? And the topics that we are covering, it's the advantages of settling your car loan early, as well as the disadvantages, and also the considerations, and as well as examples of when to settle your car loan early and when not to settle your car loan early. So here are 4 advantages of settling your car loan early. So the first advantage is that you save on interest, because remember, when you are paying that monthly installment, it is divided into interest and also the principal amount or the capital balance. So now when you are making those additional payments, they go directly towards reducing that capital balance or that principal amount, meaning that if you do make additional payments, you are going to be saving on the interest. So it means that you are not going to be paying the full interest that the lender was charging you. Number 2 is that you end up having financial freedom. So maybe if your loan was supposed to be 5 years and you happen to pay it in 3 years, it means that in the next 2 years you have financial freedom and you can choose how you want to be allocating your resources, because now you don't have this car loan debt. Number 3 is that it reduces your stress in terms of debt, because yes, there is debt related stress. You know, sometimes you might end up being worried on how you are going to have money to pay up that car. Maybe if your revenue happens to be low, or maybe if you lose a certain contract or you lose your job. So now you don't have to deal with the stress of having to settle your car if you have already paid it off. Like debt, being debt free comes with that peace of mind. Number 4 is that it also improves your credit score, because it's a reflection to the lender that you are able to meet your monthly commitments and even go above and beyond it. You are not a bad debtor. And then here are 8 disadvantages of settling your car loan early. So the first disadvantage is that you might incur some penalties, because other agreements come with penalties that if you happen to settle your loan early, these are the penalties that you might have to face, that you might have to pay. So it's important to be going through that loan agreement to check if there are prepayment penalties. Number 2, you might be faced with cash flow limitations or cash flow restrictions, because now since you are going to be taking up your savings and then putting them into your car loan in order to reduce your car loan, now you might find that you don't have those emergency savings, that emergency fund. It means that now if there is something that requires you to be putting in money, or it requires a large amount of cash, you are not going to be having that cash because you've already put it in the car. Number 3, the disadvantage is that you can't withdraw the money that you've put already in the car. It's not really a savings like when you are maybe making accelerated payments onto your mortgage bond. The mortgage bond payment, you can still withdraw them out when you need them. But now when it comes to your vehicle, you can't take it out. The only way maybe to get it out is through selling that particular vehicle. And sometimes you might end up selling below its market value or below its cost. Number 4 is that you are incurring an opportunity cost, because this money that you are putting into the car to settle it off earlier, you could have been taking it and investing it somewhere where it could potentially yield a higher return. Number 5, so if you do decide to trade in your car while you have fully paid for it, you might end up losing out on it. They might not pay you the market value of the car. They might give you just a small amount because the car is fully paid. While if the car is still financed, the dealership might try to buy out that car completely, to settle off that car completely. Number 6, the disadvantage is that you are investing, you are saving in a depreciating asset. So you've paid the full price for this particular asset in a short space of time, while the asset is no longer even worth that particular amount. It is constantly depreciating every single day. Number 7, it's that you might not be prioritizing the right debt. You might find that you have other debts that you should be prioritizing because maybe they are priced very high, but maybe you are just focusing only on settling the car earlier. Number 8 is that after you've settled this car, you might find yourself now going and entering into another car loan commitment, buying another car. That's also what happened with me. After I had settled my first car, a few months later or less than 2 years later, I went and bought another car, which was highly priced. So the considerations that you should make: firstly, it's important to be assessing all your debts, all your debt commitments. Assess them. Assess your credit card. What is the amount that is owed on your credit card? How is it priced? Assess all those debts. Assess your mortgage bond. What is the term of your mortgage bond? What is the interest rate on your mortgage bond? What is the value? Assess all the debts that you have, the school debts, the clothing debts, whatever debts that you have. It's important to do a proper assessment on them so that you can be able to know which debts to prioritize, so that you can be able to know which debts you don't really need or you need to be closing off. Number 2, it's important to consider if there are other investments that can yield a higher return than what you are being charged on that car loan. So if there are other investments that you can be investing in, it might be better to go and be investing that particular amount rather than settling off the loan earlier. Number 3, it's important to consider what your financial goals are. Maybe you are looking into buying a house, or maybe you are looking into doing a certain project. So it's important to also look at your financial goals, because if you are going to be taking all your money and putting it on the car, it might mean that you won't be able to achieve the financial goals that maybe you still have in the next 6 months or 12 months or 18 months or 24 months. So here are some examples to help you understand this topic better.
So let's say you have a car that cost $25,000 and then you were given a term of 5 years and the interest rate was 5% per annum. And then you've decided that you are going to be making an additional payment of $300 per month. It means that you are going to repay your loan in 35 months. Meaning that you are going to have saved interest of $1,395. So let's say that you'll decide to invest the $300 elsewhere, and then where you are investing, you are going to be receiving 5%. So you are investing the $300 and then you'll also invest it over that 35 months that you would have repaid your loan over. And then this interest is going to be compounded monthly. So the interest that you are going to earn is only $779. Just imagine. So you can see that in this case, the option to pay off the car early is much better if your interest rate is low. Though the interest rates seem like they are the same, they are 5%, but the effect is different because they are calculated differently. And then let's also say that maybe you'll decide to invest in an S&P 500 index fund, which sometimes gets like great returns, and then you'll be investing that $300 over 35 months. And then you can see on the spreadsheet it says that sometimes last year it was even, the return was even like over 25%, but there is the last 5 years, the annualized average annualized amount. So we are going to be using that 15.7%, and then we say that it is going to be compounding yearly, and then the interest that you are going to earn is $2,507. So you can just see that in this case it makes sense to be investing in the fund, in this index fund, rather than paying off the car loan early. So let's say you are thinking, should you save money in the bank or should you pay off your loan early? So if the interest rate that you are earning in your bank is less than what you are being charged on your vehicle, it's better to settle your car loan early. But let's say there is an investment that yields high returns, then it's better to put your money in that investment than to settle your car loan early.
So thank you for watching this video, and don't forget to like, to subscribe, to hit that notification bell, and also to drop your comments.